Well, let's get more on that OPEC decision and everything else moving in the markets right now. Pete McGuire from XM joins me. Pete, thank you so much. I know you're a passionate follower of the energy market, and in fact, you've been fortunate enough to, well, sort of sit in or sit around an OPEC meeting in Vienna before. So, I mean, this decision, what did you make of it?
Well, good morning, Kyle. Yeah, I normally attend their two meetings a year, one in May, June, and late May and June, and one in November. So you see the mood of the market, and what we saw is naturally a cut of production, a voluntary cut by Saudis to take it back to 9 million. There were really no cuts or nothing changed as far as Russia was concerned, and the winners were the Emiratis. They're up 200,000 barrels a day. And the market popped this morning, was up 4% odd. It's given back a little bit of those gains, but we're still sitting at, $1.50 up from yesterday, last night, and it's nearly $73 a barrel for WTI. You got Brent sitting at 77.30. So yeah, had a big move to the upside, and that really, I think we've got to take on board, Kyle, what the Saudi prince said, the oil minister, that speculators on the short side are going to be hammered. So it's going to be seeing what's going on. There'll be a lot of bruised people on the short side.
So I mean, do you think that move or the cut was larger than expected? Because I know the price is moving to the upside. I mean, were we sort of even on the fence that a cut would come through at all?
I think the reality of the matter is your US dollars come back from, if you're looking at October, you're sitting at 114 for that US dollar index. You're now at 104. We had a low of nearly 100. So it's given up 10% at least of its gain. So you've lost there if you're a producer being paid in US dollars. The second part is that they want 80 to 85, if not $90 a barrel. And it's sitting at 74, 75 as well off the heat. So I won't be surprised to see crude tick up from here, and it's going to be a very interesting summer period. Summer in the sense of northern hemisphere, with consumption traditionally being boosted by mobility and people transporting and holidaying, crisscrossing of nations driving cars, and the consumption pattern. So strap yourself in. Could be a very interesting summer.
Yeah, right. So, I mean, it would seem to me that, and arguably OPEC's done actually a pretty good job, I would say, if, we sort of assess it on keeping oil prices stable in a range, because $70 has been the bottom, roughly $85 has been sort of the top of the recent range. So, do you think in terms of the price outlook, we can sort of draw lines there as being, more or less where, well, if the price gets below 70, they'll just keep cutting production. If it goes above 85, well, it's probably unlikely because of the growth outlook anyway, but maybe there's a justification to step back from any further production cuts?
Yeah, I mean, Kyle, that's a very deep synopsis that you've just offered. There are so many components to this. You've got certainly weather outages in the northern hemisphere due to traditionally hurricane season starting in July, August. You've got geopolitical tensions and what's going on there as far as, and we're in many hot spots with Taiwan, that bubbling away, what's happening with the ongoing saga with Ukraine, and a number of other geopolitical sensitive locations across the planet. You've got consumption. It is waning a little bit, but you're still running at close to 100 million barrels a day from a demand picture. And I think the Saudis, I won't be surprised for it to sit closer to 85 than 75. And we've just got to wait and see how it all plays out. But it's an exciting market to trade.
Yeah, it certainly is. Let's sort of pivot, if you will, and talk about the US jobs report, if we may, on Friday night. Yeah. Seemed to be welcomed by investors overall?
Yeah, absolutely. Expectation was 190,000 and it delivered 339,000. And certainly, if you look at Dow, S&P and NASDAQ, Dow popped 2.12%, very strong. We're on the back of that today. We're up, best part of 1.7%, as no doubt, you're watching that, the ASX. So it was well received, and I don't think there's a lot of data coming out this week. We've got FOMC in middle of the month, and the rate picture, what's going on. You've got a dovish Fed chair, and where we sit as far as further rate rises for the Fed. Let's see what they do here tomorrow.
Yeah, well, of course, as you just alluded to, we've got this RBA decision. So is that the big event for the week for you? Obviously, the Aussie dollar is going to be in focus.
Yeah, it's been flat, 60. It's just on 66, 65.97. It's been a non-show really for the best part of 3 months. there's been plenty of easy money to be made compared to the Aussie. Have a look at the yen, have a look at the euro. It's given up some hot steam. So they've been, dynamic markets to trade. The Aussie's been languishing, hasn't done a thing. So if they raise rates, I think that'll probably push it up a little bit. And if they don't raise rates, then it'll probably come further, downside pressure.
And it seems to be a bit of risk on. US dollar has picked up a little bit in the last sort of 4 weeks or so. So what do you reckon about gold? Seems to be a little bit off its highs.
Yeah, but I mean, it's been profit taking and you're still at 1962. We've discussed that many times together. You're back at 2000, 2020. It's off its highs of 2080 that we saw, a couple of weeks back. But I still think that there's plenty of momentum to the upside. And if oil prices were to spike from here, and naturally that's a curse for inflation, then I'm sure that gold will take another run to the upside. So, yeah, I think its best days are ahead. Big banks are calling 2200 as the sign for this year. And we've still got, 5.5 months or nearly 6 months to run till New Year's Eve.